What's happening, everybody? We're back. It's Brendan
And Jacob.
from cryptoconsulting.org, and we're going to talk to you about reading charts today.
Yeah, so before we jump in, of course, we want to make sure that you all know that we don't give official financial advice here. We're just basically educating you, giving the tools and the knowledge that you need to potentially succeed in crypto, whether you want to invest or anything like that. It's totally up to you.
Let's jump into it. So, first thing we're going to talk about is market cap and understanding what the market cap is. So, the market cap is the complete amount of money that is in all of cryptocurrency. That's including Bitcoin, Ethereum, Ripple, Litecoin. Every single one, it's how much, we use that to see how much money is actually circulating. It has a direct relationship with prices. When you see the market cap going up, more money is in the market. If it's down, it means a lot more money is out of the market, and more likely the market is not doing as well. Looking at each of the coins, it has its own market cap of how much money is in it right now. For example, if you look at Bitcoin, it has $159 billion circulating. It has the price, which is the price that you can buy one Bitcoin right now is worth $9,440.22, and then it has the circulating supply. So you can always see how much Bitcoins are circulating at the moment, as well as any other country or currency. So you can go ahead and see this, and it's very transparent. The beautiful thing about cryptocurrency is that they give you the amount that's out there rather than money. We're not really sure how much actually dollar bills are going around. With this, we have a very stern price, and we're very transparent. Also, if you look at the circulating supply, it has somewhat of a relationship in regards to price. If there's a lot lower amount of coins, you see the price being a lot higher rather than if you see something like Ripple where they have 39 billion coins, that price is a lot lower. That usually happens in regards to that, but it doesn't always follow the same suit. I remember before people thought Ripple wouldn't go past $2. It was impossible because of the market cap, but it got all the way up to $3.60. So the market cap is always something to look on as a big macro perspective of looking at different coins and looking at the market as a whole. But for each coin itself, if the market cap is down, your coin could potentially be going up, or a certain coin could potentially be going up. You always just kind of got to check. But we always look at this for big picture.
Yeah, so next thing we want to kind of go over is a few different indicators that we look at when we're reading charts. And when we're reading charts, we're doing it because we want to see when a good time to buy or sell is, or what the trend is, where we think the price is going to go in the next, short term, long term. Depends which chart you're looking at. But if you look here, we have three different indicators. They're underlined there on the left-hand side: MACD, RSI, and CCI. RSI and CCI are extremely similar, so we usually just overlap those, and I'm only going to go over RSI today as well as MACD instead of CCI. So jumping right into that, we have the MACD indicator. So what I do when I'm reading the MACD indicator, I look at the signals here. So you can see the green line on the left-hand side. Green line, once it goes up through the orange line, that's when we know that the price is getting ready to move up in a bullish type of trend, and vice versa. When the green line goes down and breaks through the orange line, then we're going to see a reversal and the price is going to start to drop. So you can see here when this green line decided to take a dive through the orange line, then the price dropped quite a bit there. Definitely started to see a bearish trend, and then a reversal here back to a bullish trend. The price wants to start going up as soon as this breaks through here. These aren't always, perfect indicators. You don't always want to rely on one indicator or, even several of them. The price can be unpredictable at times. But going to RSI indicator now, basically when you look at this, when the RSI is higher for a while, that means it's due time for it to drop. That means it's overbought. People are they're buying too much of it. Eventually, the price is going to crash. So you can see here the price, the RSI is pretty high. Price is pretty high. That would be a good time to sell if you were doing like swing trading or day trading or anything. And then, as you can see here, reverses down to a oversold position. So a lot of people are selling. They're getting out of the market. Price is lower for that reason, and that's a good time to buy. Obviously, the price is lower and the RSI is lower, so you kind of sync those up as well as the MACD to figure out when a good time to buy and sell is. And they have these charts on tradingview.com for all of the cryptocurrencies.
All right, I'm going to go ahead and jump into the J curve. The J curve is one of the best curves you can see on a chart. It looks like a J, for example. Right here we have the J curve like this. This is a steep increase in price and in value in the coin. Since the beginning of time, or the beginning of crypto's existence, we've seen J curves throughout the growth. The very first J curve that Bitcoin went through is all the way back. In the beginning, it was December 2013 to 2014, and this is how big that J curve was. It was like this at one time, going all the way back, little J curve right here, and it's really only like a little tick in the overall 5-year chart for Bitcoin. Obviously, the biggest J curve coming in December when we hit almost $900 billion in market cap. Let's go ahead and jump into that. So going back to when that first J curve happened, it was pretty steady. We can see that Bitcoin started to get the first investments from venture capitalists in Silicon Valley, and it jumped from anywhere from $100, right, starting in September, and jumped all the way out and hit that $1,000 mark. That was really our first J curve, and then from there it went down. 2014-15 kind of steadied out, and then we kept seeing J curves along the way. The two most recent, the one in, like I just mentioned, December of 2017 into 2018, as well as before that it was April and March. We saw a massive amount of buys, almost 92 to 88 to 92% of the market was actually buys, so we knew there was going to be a massive price jump. This J curve also happens in part due to the recognition and the media coverage for Bitcoin. A lot more knowledge and notoriety as well as awareness for Bitcoin and cryptocurrency is starting to come out, so you're going to go ahead and see more of these J curves. Experts have went ahead and mentioned that this market can go all the way up to anywhere from $3 to $5 to $10 trillion. So we haven't even grasped or hit $1 trillion yet. So we might not even be a third of the way there, if not, maybe not even 10% of the way there. So we still have a lot more of potential to hit, as well as many more J curves to go through. So looking at another coin that we saw a massive J curve in, and those two things that I mentioned, the past two J curve times were in April, May, June of 2017, and then also December into January of 17-18. And with this, right, this is when we first saw Ethereum go crazy, really Bitcoin go from like 200 to $2,000. We saw Ripple go from under a cent here up to 5 cents, stayed at 5 cents for a little while, then we saw the jump all the way up to 40 cents at the time, then hovered around 20 cents for a while, and then went all the way up to $3. We see that over time through a number of different coins. Usually it correlates with the market cap, and Bitcoin usually is the first one to go. But like a coin, whenever it starts out, we see this happen. Another one is Tron. This is really the first, into December, was the first J curve that it went through because it didn't start until September of 2017. And what it did was it started under a cent, kind of the same exact thing Ripple did, went all the way up to 27 cents and then kind of came back down. If you look at this J curve, consider it back in March, it does the same exact thing, hops up, J curves, and we have a massive drop. Same thing here, J curve, massive drop. Usually after every J curve, everyone gets out around the top. It's really your tip of the iceberg. You hit there, you get out, and then you see a decline for a little while until we have a price correction and we have a new floor. Right now, with Tron, looking at it, this was an old chart. Right now, we are in April, and it's still hovering in that 8-cent area. It went all the way up to 27. We went all the way down to 3, and now we're right around that 8-cent. So we're getting back steady growth afterwards, but we're just hoping for the next J curve. Anything else?
I think that about covers it.
Awesome. So pray for J curves. We need them. Where is it? See that? This is awkward. Oh, God, shit. Did it not do it? Where the fuck did it go? Oh, no, it's on this one. See it?
Can you click on the toolbar at the top?